Stock market warning today. We are definitely in a bearish market, and this is actually a follow-up, actually kind of a part 3 to a series that I've been doing. So I'm going to put the links to those other two in the description below. Make sure you watch those, but you can watch this one first. So we have broken, and this here is the 200 SMA on the S&P 500 daily chart. So that is very important right here. And it's actually a double support because we had the 200 SMA and we had this low here. So that's considered a cluster of support. And then, as you can see, yeah, we definitely have broken below this now. That is a clear break. All right, so where do we go from here? That's the big question. Actually, let me follow up with one of the previous videos. This is one of the most important lessons you'll ever learn in all of trading. One of the most important lessons. This is so critical, I can't even tell you. And this is where a lot of amateurs get it wrong and lose money, and this is how professionals operate. Huge distinction. Here it is in a nutshell. Trading has nothing to do with predicting what the market is going to do. Nothing. So when people ask me all the time, so Barry, what do you think the market's going to do here? Are we going up or going down? So nobody knows. I have no idea. Warren Buffett doesn't know. Nobody knows. All right. So what we are doing is we are establishing probability scenarios. We're trading those. Now, those only come along once in a while. So we're waiting. We're being patient. We're waiting for those statistical models of ours to set up. Then we take the trade. And then we manage the risk on the trade. And that's it, because we don't know how far the market's going to move. I'm basically trading half cycle by half cycle. By the way, if you don't have a good cycle tool, then you can get mine for free, absolutely free. Just go to indicatorwebinar.com. I'll show you how to set it up and how to trade it. But that has to do with timing. So what we're really looking at is, I'm going to boil it down to 3 things. Number 1 is support resistance levels. Number 2 is timing. So if you think about it, let's get our handy dandy drawing tool here. And then I'm going to show you how this applies to today's market. So support resistance levels, we talked about that. We've got our 200 SMA there. That's a strong support level. All right, and that has to do with price over here. So that's your y-axis. But then we've got to look at timing. So when I went long here, which I did, this had to do with my timing indicator. So it told me that, oh, it was time to put in a cycle low. So time and price, confluence of time and price. This is something that goes all the way back to the 1940s. W.D. Gann talked about trading being about time and price, the confluence of those two. And, if you think about it, it makes a lot of sense. And those are the 2 pieces of evidence that we have on our 2-dimensional chart. We have, and that's it. It's not a 3-dimensional chart, it's 2-dimensional. So you got to use both. Now there's a third element that turns this into kind of 3D chess, and that is momentum. And that's the strength of the price movement. So it's not just about the direction of price movement, it's about the strength of price movement. Here's my momentum indicator down here. And as you can see, it just, as we went back up off of the 200 MA, we went into a cluster of resistance. So this is the 200, I'm sorry, that's the 100 SMA, the yellow one, and the 50 SMA, the red one. And I call this X marks the spot. So this is my X marks the spot trade, one of them, one structure in it. And so that's where it took profits. So because I bought out of the money calls, that was a 70% profit on the money put into that trade, which is huge. Okay, the price didn't even move that far, but because I had the leverage of options. Now, once we got into here, then we've got our cycle high, and again, momentum went back to 0. See that right there? So momentum, you can't just depend on price action. You've got to look at, okay, what is the strength of that price action? And ultimately, behind the scenes, that's supply-demand imbalance. So we have an indication here that it's gone back to just 0. Well, I don't want to stay and do a trade that has 0 strength, 0 bullish strength behind that price action. And again, as it's going into a double cluster of resistance. And so, boom, that's where we get out. So this is what I trade, half cycle by half cycle, cycle low to cycle high to cycle low. Now, if I had more strength, let me find my arrow again. If I had more strength coming into that and momentum continued to go above zero, then I would decide to stay into this trade, because then that's what determines whether price is going to break through resistance or hold resistance. So resistance is a potential level for exits or entries, but whether it holds or not, that has to do with the momentum or the strength behind that move. And this is why we always trade all three of these elements. Again, price action, sure, absolutely. Support resistance levels, that has to do with price action as well. But then cycles, the timing, and then the strength of that move. Got to take all three of those into consideration. So when I took this trade, I looked at that and I go, okay, that worked out great. Now we actually got to stop and reverse here, because now we've got our X marks the spot trade. So actually, let's clear this up again. And let's go to our X marks the spot trade. So now we've got a cluster of resistance. We've got our cycle high, time to go short, weak momentum going up, and therefore you put those three together and you got a short trade. Now we run into the 200 SMA again, and we run into this support again. But what helped us determine that this support would break? Well, again, our good old friend momentum. Because if you go down here, look, momentum went below the zero line. So that indicates that, yeah, we're running into support, but will it hold? Probably not, because, again, supply-demand imbalance. By the way, all these indicators they are mathematical measurements of the data that's put into them. In this case, we're putting in the data of price. It could be volume, it could be whatever. But that's what indicators are. They're mathematical formulas, and math is never wrong. So therefore, you could say, this is a little controversial, but in a sense, indicators are never wrong. And they just help us to have an easier way of reading things other than just looking at price bars. They give us an inside look inside that price bar, if you will, of money flow. Supply demand. That's all that makes the markets go around. Supply demand, regardless of, again, the market news, etc., is how people respond to that news. So that is the key to making money in the markets, putting together all of those elements and then keeping your head on a swivel, as they say in football, and being adaptable. You know, Charles Darwin, famous for the theory of evolution. And some people say, oh, he said that survival of the strongest. No, he actually said survival of the adaptable. And that's in trading as well. You will survive trading if you're adaptable. And I often refer to this as trading bar by bar. And that means that, okay, you take a position anytime where, okay, the odds are on your side. And then you keep watching, because with every bar, those odds shift. And with every bar you watch, oh, is it shifting? Is it shifting? Is it shifting? Or is it maintaining? As soon as it shifts, just like it did up here, then we say, oh, okay, now I've got to shift my position. Because I'm just following the money flow. I'm not predicting the long-term future of the market. I'm watching it and trading it bar by bar. That's the key to successful trading. So, by the way, if you want to get that cycle indicator, again, the timing indicator, feel free to go to indicatorwebinar.com. I show you how to set it up on your charts. It's actually an indicator already on your charts, but I show you how to modify it and turn it into what I call a timing indicator, which I use for every single one of my entries. And it is in the form of about a 40-minute video, because I want to teach you how to use it, the certain patterns on the indicator that we use.